thank you very much for joining us today as we host yet another Neo Spotlight where we ask questions to industry experts, thought leaders, and visionaries in capital markets about their views and insights, highlighting challenges and opportunities, ultimately everything of interest to investors and their financial advisors. My name's Eric. I'm our Chief Revenue Officer here at the Neo Exchange, now a CBOE Global Markets company. And the topic today, backed by popular demand, Canadian Depositary Receipts or CDRs, front and center today as we get a lot of engagement from you, our investors and our advisors on this not so new anymore way to buy global public companies from Canada. Rather than leave you to your own devices with Twitter and Reddit, we thought we'd bring together the experts, take your questions, and address a few along the way, as we know it's going to be an engaging session over the lunch break. I am thrilled to be joined by two individuals in our digital hot stove today. Please meet a familiar face, Stephen Gailey, Director of Wealth Solutions at CIBC Capital Markets. Stephen, welcome back.
Good to be here.
Indeed. And Cam Gill, a new face for us, Managing Director, Global Markets, also with CIBC Capital Markets. Cam, thanks for joining us.
Thanks for having me.
Our pleasure. So, some quick housekeeping. The group, you're here with us for 45 minutes. We may borrow a couple extra minutes towards the end, but we'll try and keep it tight today. For our audience, we've got a strong group with us yet again today. Questions in the chat box at your convenience. We'll watch it, work them through into the discussion, or we will make sure that we follow up with you after the session's complete today. If you're new to joining us, do make sure to follow both CIBC and Neo on social to make sure you don't miss out on updates, as we will be back to you with more news on CDRs soon enough. So, to the main event. Stephen, you and the team have always been busy, and this is 18 or 19 months now working on CDRs, and certainly since our last webinar in December. We just saw you last week for launch number 9, 6 new products rolled out and ready to go. Set the stage for our audience, maybe bring some of the newbies along with us into a bit of a discussion on what CDRs are, how they work, and set the stage for the conversation to follow.
Yeah, absolute pleasure. And thanks again for hosting, Eric. It's great to be here again. So, yeah, quick primer. So CDRs, I love this infographic as well. So you can see exactly the progress we've made in a very short period of time. So at this stage, where we have about 41 CDR tickers in our universe, and we've traded about $9 billion in value through the Neo Exchange since launch. So CDRs, for those of you that don't know, are Canadian security, trades on the Neo Exchange. Gives Canadians the ability to invest in US equities, but in Canadian dollars. And we also have a built-in currency hedge. Frankly, we've been humbled by the rate of adoption, and we're on a mission to keep adding to our product universe with new names based on feedback from our investor base. So don't be a stranger. And we're also spending time in the lab dreaming up new iterations of the offering. So hopefully we'll have something more for the street later on in the year. So CDRs look and feel like a holding of a U.S. equity position. They can be purchased or sold in the market through your investment advisor or your self-directed brokerage of choice. They provide dividend yields and returns that are similar to a holding in the U.S. equity, and they also have similar taxation. So one of the principal reasons the product was created was in response to discussions we had with investors and advisors who've told us for years they found it frustrating that there wasn't an easy approach for them to hedge their foreign exchange exposure. So it's a pleasure to take this time to really dig into the behind the scenes of the CDR program. And again, as Eric mentioned, if you're tuning in to learn more about the basics of CDRs, we recommend to even just take a look at the Neo Exchange YouTube channel, where you can actually find past videos that do a great job covering a CDR 101, so to speak.
I love it. Thank you, Stephen. So 6 new ones out, and those were driven by client feedback, financial advisors, retail investors ultimately asking for product, right?
Absolutely. So we have about 8 GICS sectors represented at this stage. And we're really looking to make sure that we're bringing a well-balanced offering to the market for investors. And you'll see the names are all very familiar names that should be recognizable to be held in your portfolio. And when we are listing, we're looking at the mega cap, large cap names in the US at the moment, essentially making sure that we're ticking off our liquidity box. And that's a term that my colleague Cam here will cover in a little bit later.
I love it. Well, wicked progress in a very short period of time, tremendously exciting. And I think you hit the nail on the head. You're solving a lot of problems for Canadian investors and how they access global listings. Let's dig into the weeds a little bit. So what does the structure of the CDR product look like? how are you and the team delivering some of those terrific charts when you start comparing the underlying security versus the CDR? How does it all work?
Yeah, absolutely. Let's lift up the hood. So yeah, so I like to explain by taking a look at one CDR, and in our discussion here, I'll likely use Apple as an example, and I'm just using Apple stock in my examples today solely because it's one of the first names we launched in the CDR program. We've certainly had success there, but not because of any positive or negative thoughts on the performance of the stock that I may have. Typically not the person to give great stock advice anyways, but I do recommend you to do your own research or speak to your advisor for investment decisions. So firstly, we have an account for the Apple CDR that's held with our custodian. So just for background on what that is, custodian is a company that looks after the CDR stock positions that serve as our underlying shares. So in this account, we hold a large position of Apple US stock. And this US stock position is what's represented by our Apple CDRs. So each CDR is economically equivalent to owning a certain number of shares of Apple stock. So the specific number of shares that each CDR represents is called the CDR ratio. So in a simple example, if the Apple CDR ratio is 0.1, then 10 Apple CDRs are worth one underlying Apple US share. And if you visit cdr.cibc.com, you can actually see the CDR ratio information under the CDR directory page. You can see both present and historical information there. And you'll notice that all of our ratios are less than one. So that actually reflects the fractional share ownership feature that CDRs provide. So there's two important aspects of the product I like to point out here. So one, the CDR ratio changes ever so slightly each day to represent the daily outcome of our currency hedging program. And to answer a common question we receive often, our returns are not created using options or another synthetic instrument. CDR investors are essentially owners of the underlying stock.
Brilliant. And you hit the three key features: Canadian dollars with a hedge, fractionalized. Those are the recipes or ingredients that you guys have put to work in style here. You mentioned hedge, and I think it starts to get into Cam's area, but maybe one last one for you, Steve. It's often overlooked. Talk to us just a little bit how it works when it talks about the CDR specifically, and how that might compare or contrast potentially to something Canadian investors might be used to seeing in other vehicles or products in Canada.
Yeah, certainly. Thanks, Eric. Yeah, so I guess a quick definition first. So a currency hedge, it's a term that's thrown around a lot, but I don't think anybody really takes the time to really define it. So a currency hedge is an agreement that an investor enters into to exchange a fixed amount of currency at a future date and a specified rate. So entering into that contract, the value of that contract will fluctuate depending on where the US dollar and Canadian dollar exchange rate trades. So fantastic infographic here as well. So let's take a quick look at what the currency hedge actually does for your investment. So using Apple again as an example once more, say you have $1,000, say you have a $1,000 investment that's increased in value 40%. So this means that your investment is worth $1,400. If the US dollar decreases in value against the Canadian dollar by say 10%, then your $1,400 investment is now only worth $1,260. Conversely, if the US dollar increases in value against the loonie by 10%, your $1,400 investment is now worth $1,540. So you'll see that depending on where the exchange rate moves, you'll either lose out or benefit from these movements. And in our last example at the bottom here, if you have a hedge against your Apple position, like you would with CDRs, your investment would be approximately $1,400, more or less removing the exchange rate from the equation. So we see quite a bit of value there, and for a number of reasons. Many investors will simply look to ensure that they're muting the volatility that they're experiencing in their portfolio. So you'll typically see swings in the value of your portfolio based on where your stocks are moving. And the FX, since we're Canadians, we value all of our investments ultimately with the CRA come tax time in Canadian dollars as well. So it really provides us an ability to mute that volatility, and we've certainly seen quite a bit of that over the past few years. And you know what? If you agree with the majority of Canadian bank economists and also believe that the Canadian dollar will appreciate in value against the US dollar in the coming years, then you can see why there's been growing interest in hedged securities in total, just like CDRs.
Hence the tagline, "Own the company, not the
Yeah.
currency." At the end of it, it makes a ton of sense. Stephen, a quick related one, and on the note of kind of 101 or 201 questions from our audience, there's a question about CDRs and the underlying ownership being a U.S. equity and having to be reported on your T1135s. Maybe steer that one your direction.
Yeah, absolutely. That's a great question. So as I mentioned, taxation is similar. So what we have here is a security that has the look and feel of a U.S. equity. So you'll expect the taxation side, and the T1135 foreign property reporting will also show up. We'll also have the CDR represented as a U.S. equity. So at this stage of the game, just consider it to be very similar to a holding of Apple, for example.
Super. Thank you, sir.
Yeah.
Then time to get into some of the nuts and bolts and weeds where we can leverage Cam's knowledge, experience, and role ultimately as a market maker in these securities listed in Canada. Cam, bringing to the fold, you're a critical partner in the end investor experience, although folks may not appreciate really the role you play in delivering that product out to market. There's a lot of components between what shows up on screen and what happens behind the scenes for all 41 CDRs tracking these companies in real time. For our audience, to put it in context for CDRs specifically, what is a market maker here? What function do you play?
Hey, Eric. So I'd probably start by maybe talking about the difference between a CDR and a regular security. Like Bell Canada or Barrick Gold on the TSX normally trade based on supply and demand. So yeah, people want to buy it, people want to sell it, and eventually it lands at a price that people want to exchange value at. And I guess CDRs are different from a common stock in that sense. CDRs are priced based on the underlying security at the price at which people want to buy Amazon or Tesla in the US. And our role as a market maker is to ensure that the security is trading at that price, clearing at proper value in Canada. So I guess that's not necessarily answering your question, but I think that's important to highlight. And then I think it's important to kind of mention, why do you want a market maker, and what value do they really add to all of this? And that is, almost an assurance to the end investor that they're going to be able to transact the CDR at the right price, that they're not overpaying or underpaying or, buying something that's completely offside in terms of the execution price that they would expect to receive. And a market maker, so at CIBC, we run a lot of technology, a good sized team, in systems, et cetera, to ensure that all of that is happening in an automated way so that investors have a positive experience. So a market maker is effectively allowing the CDR to trade at the right price and creating liquidity for investors whenever they do want to trade.
I love it. And it's not for the faint of heart. You think about all the kind of layers that Stephen mentioned in the primer about CDRs. You've got the Canadian dollar, which you need to consume US dollar shares, transpose them into Canada. You've got the hedge you're running, and then also dealing with the fractionalization of those shares to reflect that quote for investors. It's a pretty complex piece of technology, I presume, that's involved in delivering that across 41 names all day long.
Yeah, it's no small endeavor. But it is simple arithmetic. So that's kind of the reassurance that I give investors, is that the average person could probably not do this at scale like we can. But it is simple math. So to the extent that anyone ever wants to validate the price of a security with a ratio and an FX rate, they may not be able to do it as real time as we can, which means they may end up with a bit of what appears to be slippage that isn't actually the case. But it is simple math, and the technology is very sophisticated, very robust, and something that we deploy across all of our CDRs as well as other activity.
I love it. You mentioned a key word in there that I wanted to kind of bring to the surface as well. You can keyword is liquidity.
Mhm.
You mentioned kind of supply and demand factors and the impact that that can have on a stock. We hear liquidity in other contexts as well. Maybe talk about liquidity specifically in the context of a CDR, and how do you manage that supply and demand for our investors?
Sure. So liquidity is primarily driven by the underlying security. So, if a US security is illiquid, meaning it is difficult to buy or sell, not many shares traded on any given day, that same lack of liquidity will always translate into a CDR. So, as it relates to CDR investors and thinking about liquidity, always keep in mind that's the underlying that drives it. And the volatility, the pricing, all of the factors that you would expect to part of your investment decision on a US security will naturally translate into Canada. Our job is to ensure that enough liquidity is available to an investor and representative of the underlying security. And I would say that, very often a lot of people think about it, they talk about it, but the reality, more often than not, is it's very unlikely for an end investor or retail advisor to want to buy more than we could satisfy within, the context of the quote. So, although liquidity is very critical, again, it's important to note that there are people and machines and processes put in place that allow investors to transact a decent amount of liquidity within the context of the US underlying quote.
Brilliant. So liquidity in a CDR best judged by its underlying security, and if you need to move in size, I presume you've got a solution for that also.
Yeah, well, let's maybe go back to that with an example, just to make sure the audience is clear. If you have, US security XYZ, and that security is, a full percent wide bid offer spread and only trades 100 shares a day. You should always expect, if we were to launch a CDR, which is unlikely for us to do it on that type of security, it would be 1% wide, and it would also be very difficult to trade. So the more liquid the security becomes, the tighter the spread is in the US, that will directly translate. And if you're willing or able to buy, $5 million or $100,000 worth of Tesla in the US, you should be very comfortable that you'll be able to achieve the same outcome in Canada. And Eric, I guess on that second question, sorry, refresh my memory.
Just thinking about the liquidity of the CDR being dependent on the underlying, that was really the primary thing, just to re-highlight that, for investors, ultimately, the spread is their best representation of liquidity of the product, and then seeing size to work with is important. Yeah,
that's right. And actually on that point, like to the extent that you ever do outsize the bid or the offer, I think it's important to note that we do have channels where we can satisfy that liquidity. There are many securities where, we would be willing to trade 10 times what we may have offered at the bid, or sorry, at the offer. But we're not necessarily going to post that quantity out there. Now, two ways of tackling that type of order size would be lean into your channels. So if you're a direct investing client, I'm sure you can call, someone at Investor's Edge or at TD Direct, and they'll be happy to arrange execution through the retail block desk or that sort of thing. And to the extent that you're not able to, or you don't have the capacity to make those calls or leverage those channels, use limits. So, put an order out there with a specific price. Don't use market orders. And to the extent that it's within the proper value of the underlying security, market makers such as ourselves will make an effort to satisfy your order. And I think that's also an important point to clarify. CIBC isn't the only market maker. There are other participants and a lot of liquidity out there on these CDRs. So you should be able to get done, assuming that the price is right.
Super. That's a key one, especially for the advisors in the crowd, as you're allocating for multiple books, doing a bulk order. That opportunity is there, and pick up the phone if you're going to outsize the quote.
Yeah, I think it's reasonable for people to be uncomfortable sometimes, and especially when it comes to new products and there's a fiduciary responsibility, especially for that advisor community. Use your channels. That's how you're going to get comfortable, and there are many examples on these CDRs at this point where it may only trade a few hundred or a few thousand shares per day, and then on a single day you will see quite more volume on in relation to like the average daily volume, and that's because liquidity was provided. They leaned into those channels. We facilitated a trade, and that should give the audience some more reassurance.
Brilliant. Maybe a good segue, Stephen, back to you on two questions in the room. So Cam spoke about a lot of the things that go into building these products and successfully making them available for trading against our investor base. Fees come into play at some stage. CDRs have fees. How does that come about?
Yeah, absolutely. And as Cam mentioned, there's a heck of a lot going on behind the scenes. So as you'd imagine, nothing is free. And certainly a great question, and something that we're trying to be as transparent as possible since day one on. So CIBC earns revenue for providing the notional currency hedge. So the FX forward rate used for the hedge will on average have a spread of less than 0.5% over an annual basis. So this math works out to about 0.0014% each day. So there's always a cost for a hedging mechanism, and it's fairly similar to what is paid for the hedging in most ETF products, most CAD hedged ETF products. So this fee covers the cost of the whole CDR operation that myself and Cam are reviewing, and the hedging mechanism as well. And we don't have any other management fee for the product, so this is the one revenue line for us.
Supreme. Thanks, Stephen. And maybe an interesting one, maybe toss this one, Cam, back to you. You talked about the hedge and the hedging program, and Stephen, you covered off a bit on fees. Let's maybe walk through a quick scenario. If there are US dollar FX gains, does that get passed back into the client? How does it all come together? Are CDRs hedged in both directions?
Cam, I can actually, I'll take that one. So yeah, so I guess to cover that question, so I guess the idea is, so essentially to manage our notional currency hedge, as I mentioned, we're rolling those daily FX forwards. So what we're able to do is take the profits or losses from the FX forwards and very slightly adjust our CDR ratio to reflect those economics. So as an example, if the Canadian dollar appreciates, the CDR ratio will increase to represent a slightly larger number of underlying shares. If the Canadian dollar depreciates, the CDR ratio will also decrease to represent a smaller number of underlying shares as well. And this is all great, but as an investor, your primary concern is typically whether your CDR position is hedged against currency fluctuations and is tracking the underlying equity. So these changes in the CDR ratio don't really have a substantial impact on your returns and are quite minor, so don't expect much of a change in your dividend returns as well.
Supreme. Then I think, Cam, bringing you back into the fold around managing liquidity, it ties in a bit to a question in the crowd as well. Your CDR market making unit's been battle tested over the last 18 months. A few interesting M&A announcements, some cool press releases, earnings beats, earnings losses, which have triggered a lot of interest and activity in buying the CDR product. How do you manage what you quote on screen, and for an end investor, what's the best place to go and kind of track down available size at the bid and the ask?
Sure. So, needless to say, 18 months have passed, and we're super, super proud about the product that we've built. And even from a Canadian capital markets perspective, I think we all have a lot to be proud of. And the end investor community should know that we spend a tremendous amount of time and effort to ensure that the experience is a good one, and that everything is structured in such a way that the investor understands what we're doing, that it be very simple, and that the experience be a positive one. As it relates to size that we quote, on average, I would say it's to the tune of $80,000 to $200,000 at the bid or the offer, depending on the security, depending on the day, depending on volatility, a variety of different things. In terms of where an individual investor can see how much we are offering, I suppose that's a bit of a difficult question. There are a lot of free market data sources available to folks, like a Yahoo or a Google type of service, or a Reuters, et cetera. It really depends. But there should be quite a few free services available to investors with top level quote. It just sometimes might not be real time, and And for that reason, maybe the best suggestion would be use the market data source that's available to you when you actually trade. So whether it be Investor's Edge or a Wealthsimple account or a TD account, you should have access to that top level quote. And sometimes it's represented in thousands. So you might see a 4, that means 4,000 shares multiplied by your price. That's the total value there. But again, the average retail account, it's very unlikely that their order would be problematic, but regardless, use limits. Like that's really the best way to manage yourself.
Supreme. That's perfect. Small plug for the NEO website. Should you be on the move and not able to find your way into a real-time quote, there's level 1 and level 2 real-time streaming straight to your mobile devices and desktops if you don't have access to a professional toolkit while you're moving around. Cool. Fun one then, following through on that with Cam, like you're making markets, you're buying US securities, you're fractionalizing them, quoting them for our investors in Canada. Say you run out. Talk about that size transaction you're running through the day. Next step for you, what is that workflow like, and how do you kind of follow that through to bring more shares up to Canada?
Sure. So I know there's a slide here, but I'll try to use an example that I think the audience will be most familiar with, which is either a mutual fund or an ETF. So a mutual fund or an ETF, they're 81-102 funds for the most part. And they have the ability to create or destroy new units, meaning they can make more or make less. And that ability to make more or less securities or units of a fund basically allow market makers such as ourselves to ensure that the product trades at close to fair value, meaning we have a good degree of certainty that we will be able to sell or buy new units or CDRs or mutual funds directly from the manufacturer. This is, very similar to that. Now, I'll go through a day in the life of. So day one, when a CDR is created, we effectively seed the first launch, meaning we are the first investor. And as a market maker, we will be long a CDR and we will hedge ourselves with the underlying security. With that inventory, so then now we hold these CDRs, we begin to quote on exchange. And we, at any point, will always be willing to buy or sell. We're indifferent, and it's based on the fair value. So over time, more likely than not, granted we've had some success, we tend to sell the CDR. So our inventory goes from, I don't know, let's call it 100,000 shares to 20 to 10 to 5 to close to 0. And at that point, we create more. So that involves a process whereby we submit a creation, we create new units. So the market cap of this fund effectively goes up, shares outstanding effectively goes up, and we once again are long a bunch of CDRs, and we have a hedge on the other side. Now, through all of that, what is really happening is we are selling units to end investors. So, presumably, let's say that we sold 100,000 shares across 100 different investors. If you do that often enough, the CDR ends up with many secondary investors. Investor 1 is in Vancouver, investor 2 is in Montreal or Alberta, wherever it may be. And all of these people now begin to create a market themselves. So you have market makers who are quoting bid offer, but now you have a slew of investors who are also willing to buy or sell at any given time. The moment that happens, you've created a secondary market, meaning if the market maker were to remove themselves, you still have a bid, you still have an offer, and those folks are trading amongst themselves. That is called the secondary market. The ability to create and redeem new units allows us to constantly ensure that the fund is trading at fair and that we're willing to quote at that fair price. And it constantly allows us to permit new investors to come into the fund without paying more than they should. And the vice versa applies, meaning if anyone wants to sell it, we're more than happy to buy it because we can always, it's called destroy the units or cancel those units so that we're not incurring any cost. So whether you are buying or selling, you should never feel like you're paying too much or receiving too little.
It's actually a great explanation, and I like the tie-in with the ETF operations. In fact, like success here, first backed by a market maker, you start to form up on this secondary liquidity. It's where you see a lot of trading going on between people that are not you as the market making desk, and you start to create this really powerful result and additional liquidity in a name to bring that terminology back into the discussion.
And that's kind of what we've seen with the CDRs, which is something that we're obviously very proud of. So the amount of individual trades that we see on these products is very high, and they tend to be very small or relatively small notionals. That means that it's, the average investor is leaning into these, and they've adopted them, and that's incredible to see, and a natural market's been created. So for the most part, on some of these products now, we are supporting the market. We're not making the market always, and meaning like we're there, but not because we have to be, because we already have secondary investors who are more than willing to buy and sell at a given time. Our job is really about ensuring that it's trading at a proper price.
I like it. Guardrails, if investors want to improve a little bit on their own, by all means, but the fair price always bounded by you and the market making crew.
Exactly. Yeah.
Tremendous. So some interesting scenarios that we've run across, and addressing one or two additional questions from our audience. I think, Mr. Gailey, we've seen one or two splits since launch, maybe a few more if I'm not mistaken. How do those get handled when mapping that into CDR land?
It's a great question, actually, and it's fantastic to cover while we're on this under the hood topic. And yeah, so we've actually experienced 3, I believe, since launch. So we've had Amazon, Google, and Tesla as well, I believe. So when we're faced with a stock split, we have actually a very interesting approach that we're able to take. So as I mentioned, we have a dynamic CDR ratio. So compared to ADRs, you'll have a static ratio where XYZ stock is compared to the underlying home exchange, and it might be a 4-to-1 ratio, and that ratio never changes. So as I mentioned with CDRs, our ratio is consistently changing ever so slightly day to day. So we have 2 options really. First option is we can split the CDR in a similar fashion to what the underlying US equity splits. So I believe the Amazon split was 10-to-1. And so essentially what we can do is, looking at Amazon right now is trading around $12 a share. We could split that into 10 and essentially have an Amazon CDR trading at $1.20. Now we are certainly fans of fractionalization and increasing access for everyone, but $1.20 seems a bit egregious. So we then have the ability to pivot and look at our second option, and that option is to simply adjust the CDR ratio in the background. So a simple example, when we launched Amazon CDR, the ratio was, we'll say 200-to-1. So 200 Amazon CDR units equated to 1 Amazon share. And that's when Amazon was trading above, I think, $3,500 a share in the US. And post-split, what we're able to do is essentially adjust that 200-to-1 ratio to 20-to-1. So now 20 CDR units equate to 1 Amazon share, and that's essentially what we did. So similar to any stock split, the actual economics of your position doesn't change. Theoretically, a split should never really impact the value of your holding. What you're essentially walking away with is more shares.
And the CDR, making sure you're entitled to more of those shares through the workflow, through the ratio.
Exactly. Yeah.
Dividends, we've covered previously in a laundry list of conversations, and you touched on it briefly, but just knowing that's one of our frequently asked, those get flowed through in Canadian dollars.
Yeah, that's a great question. As I mentioned initially, we have a custodial account holding our US shares that underlie the CDR program in each individual name. So in that account, we're receiving the US dividends. And from there, what we're able to do is quickly exchange those dividends, the US dollars that we receive, into Canadian dollars. And we essentially do that at institutional pricing, which means very close to spot FX for the US CAD. And we're able to pass that on to the end investor, the CDR investor. So as it is a US source dividend, expect withholding tax as long as your account is updated properly with QI information or your W8 Ben docs documents. You'll expect 15% withholding tax typically. RSPs, you wouldn't expect a withholding tax as long as it's set up properly.
Supreme.
Yep.
Then with all the success, and I know we're moving quickly on ticker counts and certainly ahead of the original plan to deliver. I think we got a few questions in the crowd about where we're going from here, and really how are you picking what that next US name is to end up in CDR land?
Yeah, absolutely. In my opinion, I don't think Cam and team really need to sleep. They can just keep plugging away and keep expanding. No, we would love to keep expanding as much as we can, and that's very much our intention. Launching 41 names in just over a year and a half was not our original expectation. And as Cam and I both mentioned, we're quite humbled in terms of the adoption on the street, and we're very excited to keep this train moving. While there is interest, we're going to keep increasing the number. I think by the end of 2023, we'd be really happy to see 50 CDRs listed based on U.S. equities. And Cam, where else do you think we could take this program?
I know the audience isn't on the line, but I would strongly, encourage you to filter your feedback, right? Like I think, what we're trying to do here is create product for investors, and I think that's really, what creates a success for Canada and what's kind of allowed this product to flourish. We'd love to hear ideas. I think to Stephen's point, the thought is to do a few more of what we've done, and to provide value. So in terms of what's coming up, there's not much that I can really say at this point, but it is feedback that drives it, right? So ideas and demand, and that's what we'd love to hear from the people on this call as well as investors. So feel free to leave feedback in the chat and the Q&A, or filter over to Neil.
Yeah, and I see some great suggestions right here in the live chat, and there's questions about whether or not we'd be able to list based on ETFs. That's an interesting question there. And again, there's a heck of a lot of potential for the program like this. And as our investors continue to support the program, we're able to take that interest and really just propel it into more growth for us. So you can access all of our listed names on the New York Exchange website, on the cdr.cibc.com website, and filter through those names. Our intention is really to make sure we have a balanced offering of these U.S. equity names right now, making sure that everyone's able to really build out that portfolio that they're really looking to build.
I will probably highlight just on that U.S. ETF question. Like, it's not something that we're looking to do at this point, but again, you never know where the world will take us, but it's not in our plan.
Super. You addressed the non-hedged version. I know there's something we were getting a lot more at the early days in our conversation, where maybe the currency wasn't running in the desirable direction, shall we say, for investors looking for a hedge. And you mentioned now that that's something you'll continue to think about, but demand-driven there also, I presume.
Yeah, I can take that one. Yeah, no, exactly. If there is demand there, then we'll certainly look at the potential of creating a product like that. Right now, especially with the expensive US dollar relative to the Canadian dollar, the bulk of the interest that we're receiving is really for a hedged product. But maybe you can ask me that question again if we ever get back to par, Eric.
Roger that. I'm chuckling in the chat. There was another request for Adobe and Eli Lilly. So supply and demand here, folks. If Adobe's on your list and you've sent it, don't send us another email. But if you haven't sent one in yet, please do fire it through. I'd love to get a few more on Cam and Stephen's list of things to get done. So thank you for sharing those through. I'll address one question on the option side. We've got a few questions on the last webinar about it. We ran out of time to chat about it. At this time, we don't have an options market for CDRs. It is something that, based on feedback, we've started digging a little bit into, but not really too much else to say on it for the time being. They're not available yet. But like everything else, send that feedback through, make sure it's heard. We will receive every email that you punch in through that chat box, either to Neo or to CIBC, and we'll make sure that we aggregate that and come back to you if and when something moves ahead on that front to address it for you.
Great.
Gailey, outside
Eric,
the US, where are we going?
I think that's a fantastic idea. Right now, we're certainly pondering what that would look like as Cam mentioned, there's liquidity that needs to be managed. So what does it look like when the stock exchange hours maybe don't line up? Is our team able to really solve for that? We're well aware that there's certainly some barriers for retail investors in terms of accessing international markets. Maybe there isn't enough transparency trading on an over-the-counter exchange, trading in ADR, and what our solve really there is can we create a product that's better than the current experience? So if we're unable to, then likely we wouldn't be pursuing that. But if there's that potential, then again, as I mentioned, everything is on the table.
Super. Well, you got another request for ASML in the chat box, and we kind of covered off internationals and foreigns.
Maybe quite a few semiconductors on the table already. So I know we added Intel. That was definitely a name that came up quite a bit over the last while. Eric, I love that. There's a question from Pedro there regarding holidays. I think we have Cam here. I think that'd be a great question to pose.
Sure. I guess the question that we're receiving is CDRs are not open on, or sorry, where is it?
So you can probably answer it both ways. When Canadian markets are open, US markets are closed, behavior capabilities, and then the question's really the inverse. Canadian markets closed, but perhaps US markets are open, and I'm happy to jump in there as needed.
Yeah, so I think, maybe I'm putting words in Eric's mouth, but to the extent that the Canadian market is closed, that's right, these don't trade. These are Canadian listings. They're not US listings. So I doubt that that's something that's going to change anytime soon. Unfortunately, I'm sure that we're obligated by regulatory and other requirements as it relates to listing marketplaces in Canada. And is it, I guess the opposite is worth noting, which is when the US is closed, these are open in Canada. And obviously they are less liquid. They do trade a bit wider. And from that perspective, it's worthwhile to note to these investors, you should be a little bit more cautious with how you trade and when you trade. But on the purity of the question, which is like, can NEO open up during Canadian holidays? Something tells me Eric wants to take his vacations.
We do deserve a day from time to time. So to Cam's earlier comments on market making effort and the technology and complexity of systems that all come together, when the systems, and it's not just ours, it's clearing, it's settlement, it's data teams and platforms that all kind of come together. But we are the first in line, obviously, and our systems are indeed off on Canadian holidays at this time. No real intention to change it at the moment.
And I think just to reiterate as well, if you are trading on maybe it's a US holiday and our CDRs are trading in the market, make sure it's even more important to make sure that you're using your limit orders, especially if you have a much larger trade that you like to get through. If you have a certain price you want to pay in mind, best approach is to use your limit order.
I like it. Know your limit and play within it, as the saying goes. Maybe a sidebar question that I anticipate is perhaps coming from larger investor groups. CDR is obviously really successful. How much demand is enough to trigger the need or interest to create a new product? Is it strictly just how many times we get a question for Adobe, or is there another driver that you guys are using to try and evaluate criteria for eligible stuff to move ahead?
Yeah, that's a great question. So I think for that one, what we're really looking to do is make sure, again, that we have a balanced offering on the street. We'd love to list a CDR program just with 10 semiconductors. But we certainly have a number of users, be them in the investment advisor channel, be them in the self-directed channel, that have a number of asks. And the more information we get in terms of, I want this name, I'm not so interested in this name, I love this sector, we need to see more in this area, that really informs us where we're going to continue to drive our program. And for us, what we're really looking to do, as Cam mentioned, we do have specific requirements in terms of the size of the underlying security, and be that market cap, be that the volume traded over the last 30 days. So those are all things that we're looking at, and we're consistently looking to really build out and make sure that we have that balance. And again, like the last thing we would like to be forced to do is remove a listing of a security. So we're very hesitant to list names that maybe are just a bit of like a meme craze support or something along those lines. What we're really looking to do is make sure that we're launching names that are here to stay and that will have continued interest.
I'd probably just add to that, in case that's where the question was going, like, minimum assets and should they be worried that a fund will close? I'd probably, just highlight that a lot of effort and thought goes into how we modify the program, what securities we add, and we look at the program holistically. So if you see us add something and, it's just been trading for 3 days, you shouldn't hesitate to purchase it because you think that, it's too new. If we've listed something, it's with the intention of keeping it, and we look at the program holistically. And you don't need to feel like you have to sit on your hands or on the sidelines waiting for others to accrue critical mass in that product. You can take confidence in, number one, it's going to trade well. It's liquid enough, the underlying itself, the price is going to be appropriate. And also, if you buy it, you're not inheriting any risk. So even if you are the only person who holds a CDR, and that's going to be the case always, at least at inception, you can take comfort in knowing that it's not going to impact you in any particular way.
Stunning. And it's fun being at the beginning, submitting those ideas, knowing that there's demand for it, obviously guides where you're headed. And then eventually you start getting some of these really fun ones. You look at your oldest CDRs now dating back 19 months. You've got Tesla, Amazon, Google, probably your most actively traded amongst the retail crowd, especially as there's news like that. That's the definition of fun. And you got your new ones that are just getting your footing underneath. And Cam, to use that word again, that liquidity will start creating itself against other investors who want to buy or sell and trade against you. But Cam, you're always there at the beginning, which is the key part to give any new participant, small or large, as an advisor, comfort that the product is there to stay.
Yeah. Can I maybe just highlight one more thing just for the audience that might be relevant? Sometimes securities don't trade every day. And very often the platforms that you use will leverage last price. Keep in mind that that's not necessarily where things are trading, especially on these new securities. So we just launched Uber a couple of weeks ago, and that one trades, but let's assume that it didn't trade. And last time it traded was 2 weeks ago. The last price that you're likely going to see on your platform is going to be stale, and it's not going to align with the current trading price of Uber. That doesn't mean that it's tracking correctly. That doesn't mean that it's not reflective of the proper live price. That's just like a stale market data point. So just to reiterate, we quote these things real time on exchange based on the underlying value. And sometimes these market data metrics may not necessarily be accurate. So use the CDR website, use the NEO website. There's lots of good live data there that can kind of reinforce that decision making.
That's important. Quote is your best indication of where to trade. Ultimately, if you go to sell, you're looking at the bid. If you're looking to buy and it's not in your portfolio yet, you're looking at the offer for that reference price on what you can get in or get out at.
Sure.
Gentlemen, we run through 50 minutes in lightning pace, and not surprised. We had a litany of questions which we got through. We covered off kind of that first layer recap. What are CDRs? Where are we going? What do we have available to you? Cam, you've been an absolutely gracious host on giving everybody a bit of a view into your world as a market maker. One of the things you do to keep bids and offers in size moving for our investor base. Really appreciate you taking your lunch hour to chat with us and share a bit about the world of market making in CDRs in particular. Stephen, I think the world's looking at you as far as figuring out what's coming next. So to our guests, Stephen and Cam, thank you very much for joining us and sharing a bit of the view from your chairs as the originators and builders of this product, and those that are front lines tackling questions and inquiries from our investors and advisors. Really excited to welcome you both back for another launch soon enough. To our audience and our investors and advisors who joined us during their lunch hour, morning breaks, if you're on Vancouver time today, keep sending your feedback through. Keep your questions coming. The team and I will absolutely make sure they get addressed in due course. And don't hesitate to reach out with any new ideas. Know that we pass all of your feedback through to our CDR issuers, and that guides that decision-taking process next. So really appreciate the support, all of you showing up for us today. Gentlemen, thanks again. And this is Neo signing off for the day. Thank you very much.